Today we're going to talk about 10 myths that creators believe. Number one, they didn't take taxes out, so I don't owe anything. Wrong. So when you are a creator, you're considered an independent contractor. As an independent contractor, it's your responsibility to pay taxes on your own. Because when you was an employee, your employer withheld taxes for you. But now that you are considered self-employed, it's your responsibility to do so. So you need to worry about remitting federal income taxes, Medicare and Social Security taxes. So Medicare and Social Security taxes, those are your self-employment taxes. 3 taxes that you need to worry about: federal, your self-employed income tax, and then your state if your state has state taxes. So there is no such thing as you don't owe because they did not take any money out. Keep in mind that it's your responsibility. Myth number 2. If I didn't get a 1099, then I don't have to report the income. Wrong again. Now, there may be some instances where you did not receive a 1099 because you did not earn over $600. The amount that you're supposed to get a 1099 is when you owe $600 or more. Now, in the event you did not earn $600 or more, that does not mean you're not supposed to report this income. Because what you all are failing to realize is it's earned income. So all the money that you earn, you are supposed to report it. If you get paid via Zelle, Cash App, Venmo, Stripe, or any other payment processors, you may not have earned $600 on each platform, but collectively, you probably have earned well over. But no matter how much you earn, you are supposed to report it as income, even if you do not receive a 1099. I want you all to keep in mind, these people that are paying you all, they have to report these things to the IRS. So failing to report it on your end could become a big issue and cause you to have issues with the IRS. Myth number 3, creators don't have to make quarterly tax payments, also known as estimated tax payments. Wrong. It does not matter what industry you're in. It goes by, let's just say if you are a sole proprietor, meaning that your business is not registered with your state, but you're just simply doing business in your personal name, and you are expected to owe $1,000 or more each quarter, then you need to be making estimated quarterly tax payments. Even if you are a single member LLC, then you are also supposed to be making these quarterly tax payments. The rule is if you are a corporation and you're expected to owe $500 or more, then you need to be making quarterly tax payments. And if you are a sole proprietor, single member LLC, then partnership and all of those, you are supposed to be making quarterly tax payments if you owe $1,000 or more. So remember, $500 for corporations, $1,000 for individuals and small businesses. If you all skip making these payments, that could cause you to owe penalties and interest. The IRS, they do not play when it comes to receiving their money on time. So you want to make sure that you're remitting this money over. Myth number 4, everything is a write-off as a content creator, influencer, or entertainer. And you all, I cannot stress this enough. Everything, just because you are in the limelight, that does not mean everything is a write-off. The IRS go by 2 words. It must be ordinary and necessary an expense that you need to operate your business. So if the expense is not ordinary and necessary, that does not mean that it is a write-off. I want you all to keep in mind, let's just say you are a content creator on YouTube and you make content. I'll use myself as an example. I am an enrolled agent. I teach tax education, you all. So that does not mean just because I'm on camera in the public view that I can write off the amount that it costs for me to go and get my hair done. It does not mean that because I get my nails done and I'm showing them on camera that I can write these things off. No. Please do not believe the hype and go and write off all of these expenses that are not ordinary and necessary for you to perform your job duties. Now, let's take my phone, for example. Now, I'm using my phone at this very moment to record this video. So I have to have something to record on, right? In order for you all to be able to see, hear this video. So my phone, depending on what all I'm using it for, that can be an expense for my business because it's ordinary for me to use my phone to record videos, and it's necessary in order for me to get the content out to you all. And that could be written off at a percentage based on what I use it for. Now, this particular phone I use solely for business, so it is 100% write-off. But everything, it does not add up to be a deduction. It's going to depend on what industry you're in to determine if it's ordinary and necessary for you to take the deduction. Myth number 5, if I form a LLC, then I will pay less in taxes. That does not mean anything, you all. Now, there are some elections that you can make, such as the S-Corp election, that will allow you to save in self-employment taxes. However, that must not be done prematurely. You need to consult with a tax professional to determine if your business is at a point where it would be advantageous for you to make the S-Corp election. But automatically forming the LLC, it does not automatically mean you'll pay less in taxes. What it means is that you have a limited liability protection over your personal assets. So in the event that you're sued from the business side, your personal finances will have that limited amount of protection. So automatically forming the LLC does not guarantee that you will pay the less amount in taxes. Myth number 6, I'll just handle it later, meaning that you have not filed taxes in years and you feel like I'll just handle it later. You all, that is one of the worst mistakes you can make, because when you do not file your returns, then there's no statute of limitation. So that whenever, let's just say if you haven't filed taxes in 5 years, well, don't you know that that time has not started rolling yet, and there's no statute of limitation on unfiled returns. So you need to make sure that you're filing your returns every year on time. And if you owe, you all, don't panic. The IRS will allow you to make payment arrangements. One thing you just have to be mindful of is those penalties and interest. So just saying that you'll do it later will not solve a problem. You need to go ahead and tackle it head on, because filing it later will allow you to miss out on opportunities to waive penalties and other things of that matter. Myth number 7, my friend tax professional said this, so why I can't do it? Okay, for better or worse, everybody's tax situation, you all, it is not the same. What applies to one person may not apply to you. For example, let's say that you are married and you have 2 kids. Now, your situation would be different versus someone who's single with no kids. When it comes to taxes, there are several factors that come into play. It could be your income level, your marital status, your dependents, your business structure. You may be a LLC taxed as a corporation, but your friend may be a LLC taxed individually. So if you all could kind of see where I'm going with this, everyone's tax situation is different. So stop saying, because my friend tax person said that she could do this, why I can't do it. The answer is black and white, because everyone's situation is different. Myth number 8, because my income fluctuates, there's no need for me to plan. That is actually the total opposite. Because most creators' income fluctuates, that is all the more reason that you need to be planning, because this will allow you to stack up on your reserves during those really high months where you'll be able to compensate for the low months. But also, proper planning, it allows us to be able to make strategic tax plans for you all. This will allow us to be able to adjust your quarterly tax payments based on your income fluctuating. It'll allow us to be able to plan more diligently for certain tax deductions. So just because your income is fluctuating, you all, that is more of the reason for you to have tax planning in place. Myth number 9, I'm not big enough for the IRS to even care. Wrong. Now, if you are familiar with what happened during the pandemic, where they was giving out these PPP loans and people were getting caught, and some of those people were actually the little fish, not the people who got the great big amounts. But just because you don't feel that you are big enough, the IRS does care. The IRS look at you like, okay, you have less representation. We're likely to find more errors, so we are more likely to audit you. Because you're not that big, you probably won't have a support system to help you out in the event you are audited. So don't think because you are a small fish that the IRS do not care. Myth number 10, owing taxes mean that I am losing money. False. Actually, when you owe in taxes, it means that your business is profitable and you are actually making money. Now, there may be some instances where you will qualify for certain credits, depreciation, or other things like that, that will allow you to be able to pay zero in taxes or the less amount possible, but you must have a plan for that. If you are an entertainer, influencer, or content creator making real money, but you are still confused when it comes to taxes, compliance, and your financial future, then you are in the right place. I'm Keisha West Neal, enrolled agent and financial strategist. I don't teach fluff, gimmicks, or loopholes, but instead we talk strategy, structure, and stewardship so that your money will last well after the spotlight moves on. Let's get into today's truth. Most creators don't have a tax problem, they have a system problem. There's no planning, they're not coachable, and they're just thriving off views and hopes. Now, if this video resonated with you, I want you all to subscribe and stay tuned for the next one.